Okay, and thank you for joining in again, and for all of you that have stayed with us, thank you very much. It's 27 minutes to the top of the hour, still with the second hour of your morning Kickstarter. Good morning again, I'm Jerome Paul Sonko. So we're still with our topic of discussion this morning, which is the tax policy amendments for the financial year 2022-2023. And like I said before the break, I would want to know, and I would believe some of you will as well want to know, because most of the businesses in Uganda are owned by small-scale traders, or people who are actually operating small shops and all that, or the ordinary kadukas in our residentials that we all know. So, Madam Afsa, I would want to know if someone, if I owned my small shop,
yes,
my small retail shop,
yes,
am I supposed to pay a value-added tax?
If you're owning your small shop, then ideally on the VAT chain, because it's a multi-stage tax, on the VAT chain, you are deemed to be the final consumer, because you're not VAT registered. If you are VAT registered and I invoice you with VAT, that means I'm selling you with VAT. It is assumed that if you're VAT registered, you're going to pass it on to your client.
Okay.
But if you have a small shop, on an assumption that it's not VAT registered because you do not meet the requirements for VAT registration, that means you bear the tax burden. Whatever you buy that has a VAT component rests at your place, and VAT becomes a cost to you. So what you can only do, probably when you're filing your income tax returns, is to expense the amount in your expenses, your business expenses, whether purchases, whether just the normal administrative expenses, you just expense it.
Okay.
So it rests with you. But if you are VAT registered as in yourself, then that means you're going to pass on the 18% component to your client who is going to buy from you. So, but in the event that you're not VAT registered, you're not mandated to collect a tax that you can't pass on to your RA. So the tax burden lies with you.
Okay. So I think that question can be has actually been answered. Let's get back into our amendment for the 2022-2023 budget.
Yes, and the other amendment probably that I was trying to push through in VAT is the supply of oxygen cylinders for medical use. They are going to be exempted from VAT.
Okay.
Because we've had an experience from COVID that oxygen was scarce. It was everything. It was expensive where you could find it. So people
were actually fighting for cylinders.
Exactly. So in the event that you supply oxygen cylinders, say to a hospital, to a clinic, you don't supposed to charge them VAT on that particular supply. But oxygen cylinders for medical use, I'm not talking about cylinders that we use to probably weld and do whatever we do in the garages. For medical use, it's clearly that it will be exempted so that these services can be affordable, these goods can be affordable. And maybe the other is that assistive devices for persons with disabilities, the hearing aids, walking, the talking, such equipment that help persons with disability probably to do something. All these assistives will not carry VAT. They'll be exempted from VAT effective 1st July. Reason is we want these gadgets or devices to be affordable to those who need them, like hearing aids, like walking, the movement, the bathing. They have a lot of equipment that helps them out depending on what impairment you have. So those also will be exempted. And maybe the other thing we initially the supply of educational material has been zero rated. And educational material, I'm not talking about exercise books. Something that can be used for more than one purpose does not qualify to be an educational material.
So which one do you rate as?
I'm looking at a textbook.
Okay.
I have my MK textbook.
It has a
for science, P6, P4, English. That is entirely educational.
Okay.
You can't take it anywhere and use it. I'm not looking at an exercise book. I'm not looking at a counter book, because you are going to use it for something else.
True.
You will get that exercise book, tear in and probably use for your business and all that. So I'm looking at basically educational,
Okay.
instructional materials that teachers use in class when they are trying to
Chalks.
probably teach and all that.
Okay.
So that is that's what constitutes educational material. So initially, a company that has been manufacturing educational material, it has been zero rated.
Okay.
When the company is in Uganda, but now we are stretching it
to the imported
to the EAC partner states.
Okay.
If one of the partner states has a company that is manufacturing educational materials, as they are coming into Uganda, they will not be charged with VAT. They'll be zero rated. So we are trying to harmonize with the partner states. Okay. Initially, we were restrictive that in Uganda. So now that amendment is trying to harmonize with the partner states. And maybe also what is zero rated now is the supply of menstrual cups, the tampons, and maybe the inputs that are used to manufacture them are equally zero rated now. So that is what we wanted to make clear. Okay. And maybe a number of penalties have come through the tax procedures code. But before I go to the penalties and the tax procedures code, maybe what I wanted to put clear, because we have domestic taxes agents that we appoint. So there is an amendment that has come through that as we appoint you and give you a license, all your licenses have to expire on the 31st of December. Initially, what has been happening, you start your business, you come today in July. When I give you a license, it runs for a year and ends in July next year. So what is happening, they have to all end on 31st December. So we are trying to synchronize it with the customs agents year. So that's why we are doing like that. So when I give you a license today in July, it has to end by 31st of December. So we are trying to push all our clients to the Jan-December year so that we can synchronize whatever they need to do. Because these are the same agents that could be helping in the customs bit, and they're equally helping our clients in the domestic taxes side. So we want to put them on the same accounting year so that they can probably use the same year. Okay. And maybe we have a number of penalties that have come through: failure to activate a stamp. Okay. If you have items that you probably import or manufacture where you need to affix a stamp, the gazetted items, soda, bottled water, beer.
Everyone.
Pardon?
Does this depend on all the traders?
No, it basically looks at manufacturers of gazetted items or importers. Okay. That is where the stamp has to be affixed. In either of those two, depending on whether you're importing or manufacturing. Okay. But at times one affixes a stamp, say on water, but they don't activate it. Once you don't activate it, if it's a manual stamp, we cannot get a signal of how many items you are stamping. Okay. But when to some companies that already had automated systems, for them they are using automated stamps. So those ones, the fact that you have assigned them to items, they automate in the system.
Automatically show
exactly, they activate themselves. Okay. But for the manual ones, you need to activate, but there are some who do it intentionally, and they don't activate. So at the end of the day, we see there's a supply of stamps from SIGPA, then here we can't see automation. So we wonder, where do the stamps go? Oh. Then when we come to do an inspection, you have put them on items, but they're not activated. So there is a penalty if you do not activate stamps of about 50 million. And maybe if you fail with the requirements of IFRIS and DTS, then we could close your business, which is a little disturbing. And maybe the other requirement in the tax procedures code, in the event that you're in the construction business, effective 1st July, we want you to give us a list of all your contractors within 7 days of signing the agreements with them. Okay. Reason why we are doing it this way, we want to widen the tax base. If you, the construction company, is paying us taxes, and you have people you're working with, the contractors, if they go without being taxed, it's unfortunate. We are not leveling the ground. So we want you to help us, give us a list. For those who are not yet registered, we can register them. Then they come onto the register and equally take their fair share.
I would want to as well understand with most of these engagements you've been having with the taxpayers,
Yes.
Have you happened to understand why some of them choose to evade these taxes? Before we even throw in these, these penalties.
Okay, some may not know that probably the business I'm doing has to do what? Has to pay taxes. Some it's maybe there's a knowledge gap, some it's ignorance, others it's a practice. They feel they just don't want to pay.
Even when they know.
Even when they know, they feel they just don't want to pay. It is just within themselves.
Okay.
So we want to level the ground. If we need Uganda that we need to see, it's a sacrifice. We all pay taxes, and equally, each of us should contribute to see the Uganda you want to see in about 20 or so years. It is a sacrifice, because when we do not pay taxes and have a shortfall in our budget, when we do external borrowing, we borrow from countries, and whatever we borrow are taxes that they've collected, an excess of what they've collected. If they can lend you an excess of their taxes, then why don't you pay your taxes? So that we ensure that we minimize the level of external borrowing. Because these borrowings are expensive in the long run. They may act cheaper, but they're expensive. And secondly, they're restrictive. Because they may give you funds, they want you to put them in a particular sector. Yet for us here, that sector is not a priority sector.
Then we have a priority.
Maybe exactly our priority is maybe education. And they've told you, what you're taking here, it's for roads.
Okay.
Or agriculture. But we feel that education is wanting. After COVID, schools closed and everything went a mess. Schools are struggling and it's a mess, so probably we need to revamp them or help them out. So it depends on the country's priority. So in order to avoid all that, let us see how we can equally contribute. Whatever little is there, it's what we should contribute. And maybe misleading statements. Normally when people give us their returns, some give us misleading statements in their declarations. Either they under-declare or do all this and that. So there has been a penalty. Initially of 4 million, but now it has been increased. Yes, it's harsh.
Okay.
It's about 110 million, which is really harsh. I mean, I wouldn't want even to pronounce it. At least the cost of complying is better. And giving us a full declaration of your returns. It's better than waiting for this penalty to hit you. At times you end up closing. Because you can't operate. Just imagine picking out 110 million as penalty. Then how much is your capital?
You actually
because it's eating up your capital and everything, and you
then the lifetime of your business is greatly affected in the long run.
Exactly. So ideally for that, I think we should see how to probably comply. And maybe what we did here is to make it clear of who an informer is.
Okay.
An informer shouldn't be a staff of URA because it defeats the purpose. It's like conflict of interest. You can't be an informer in your own business.
You need
because the business is ours.
It's just like
so the informers should be
exactly.
We need the informers to be out of our business because they are telling us what we purportedly may not know that could help us. So if this informer happens to give us information that could help us identify unassessed tax, then we could give that informer 1% of that unassessed tax or 15 million. But in the event that that unassessed tax, at the end of the day, we have recovered it and it has been paid. Then we can give the informer 5% of the recovered tax as in being paid, or 100 million, whichever is lower. Is what we take for informers.
Now, as we're winding up with this discussion, I would want to throw in the idea of the electronic physical receipting and invoicing system that took effect last year. In the long run, we've apparently got to engage with some of the retailers that are actually using IFRIS. Some of them say it is easier, others are saying it is making things more expensive. So from the perspective of the amendments here, so what are those offenses related to IFRIS and the digital tax stamp?
The offenses that are related to IFRIS, one, if you're a gazetted client who has to issue a fiscalized document and you found not to be issuing it, that is one.
Okay.
It's an offense, and definitely that offense goes for 1,500 currency point, which to us is about 30 million.
Okay.
If you're found, maybe you have defaced the stamp. We've put a stamp onto an item and you have covered it with something, either your paper or whatever it is, that is an offense. If you're found not having activated a digital tax stamp, that is an offense.
Okay.
If you're found to purchase stamps and you're not affixing them, probably you could be selling them.
Okay.
We wonder why you're selling them, because we have one vendor who is SICPA, who is supposed to
be supplying this
exactly to be supplying.
So that means you're supposed to have these ones from one,
because the stamps are different, by the way. Okay. They don't make one standard stamp
because they know there will be duplication.
Exactly. We have the one for soda, we have the one for water, we have the one for wines and spirits, we have the one for sugar, we have the one for cement. So these stamps are different. So we may find a stamp for sugar, I think you've put it on cement. So there's a problem, because even the costs are different per stamp.
Okay.
You'll find the cost of stamp, say for sugar is 36 shillings, yet for cement is 139 shillings. So we wonder why you are switching them
from sugar to cement.
Exactly. We wonder what exactly. And at the end of the day, when we look at your profile, you do not have a cement company. Because if you're operating a cement company and sugar, maybe we would say mistakenly these were attached on this. But if you have only one line of production of an item,
then how come do you have...
Exactly, because initially when you're registering for digital tracking solution, you register via the portal. Here you're telling us and SICPA that, look here, I am dealing in this. You upload the image of your package so that SICPA can know this is how I package my item, and it will know what kind of stamp. Because even on the bottle lid, we have those stamps that have a long neck. That's why they are longer than the one on soda. The ones for wines and spirits. So they need to get the image of your particular package, how the item appears on market, so that they can help assign the proper stamp. So after doing all that, you can't tell us you're mistaken. So at times these penalties just come in handy when you have probably interfered with a device. We give you an electronic fiscal device and probably you've interfered. It's doing some bypass transactions, and all those are penalties that may come in when you try to alter what initially wasn't what you want it to be. All
right. And this is Madam Hafsa Seguia from the URA Tax Literacy Unit. Now, in 2 minutes, your last remarks as we're winding up with our discussion.
My last remarks as we are winding up the discussion, because we're equally winding up the year. Our year ends on the 30th of June. Yes. I would like to remind our clients, our registered clients, for those who haven't filed your provisional return for 2021, 2022, the deadline is 30th June by midnight. Please do so. In the event that you filed and you need to amend, please feel free to amend it before midnight of 30th June. And in the event that your accounting date is 31st December, please push in your final return before midnight of 30th of June, so that we can work in harmony. If there is any tax outstanding that needs to be paid, please ensure that you get it paid. In the event that probably you can't pay it at once, please come to us. We have payment installments arrangements that probably you could enter into, and you pay in bits and pieces until you finish it. But maybe I would like to thank our clients. I would like to thank Ugandans for those who have contributed to national development through paying their taxes. We'd like to thank them very much. It has been hard time and all that. We went into COVID. We are now in the recovery mode, and we have clients who have supported us by meeting the obligations and see that they do the right thing, they comply and give us these monies. However, because when we have a target as URA, the money doesn't come from our pockets. It comes from those clients. So it would be unfortunate if I do not appreciate them.
Okay. And
I'd like to thank them very much.
Where else can they get this information?
This information, we are going to upload it on YouTube. We are going to upload it on our portal. I think by the end of the week, we'll be able to see these amendments there via our portal. Our portal is on www.ura.go.ug. Normally, you put the amendments there. When you go to tax laws, you'll see even the amendments for the previous years.
Okay. And then key among the amendments for the next financial year is tax compliance on value-added tax, something that we've highlighted here very much so. Good morning, and stick around with me after the break. I have more from the business tips, the no comment, and sports business.